Find out exactly what is the OPEC likely to decide upon on its two-day meet. Sambit Mohanty, Senior Editor, Oil and News Analysis, Asia at S&P Global Platts India joins in. And Peter McGuire, Chief Executive Officer at XM Australia as well on the show with us. Gentlemen, morning. Peter, if I could start off with you. The matter of whether or not the cut output has been more or less, decided. Now, the debate has moved to how much. Given the current supply-demand situation, what quantum would help catapult the oil markets, according to you?
Well, I think a couple of things. If we see a 1 to 1.5 million barrel cut or more, then that's really going to underpin and give a lot of credibility, and I think should support price from its current angle. You may see an increase on that number. It's a little bit undecided, but I feel as though that's been the general consensus over the last 24 to 36 hours here on the street in Vienna. And if that is to continue with that sort of forecast and that's what materialises, then that could support pricing in the short to medium term.
Right. Peter, but Saudi wants 1.3 million barrels being cut in total. Russia is willing to do lesser. Who do you think, given the current geopolitical situation, will blink first?
I feel as though that there'll be some form of compromise between that Saudi and Russian number. As we know that the top three producers in the world are Saudi, Russia and the United States. And there probably will be a little bit naturally pushback from Russia. Their economy certainly needs a higher crude price, and very much like a lot of the other OPEC members. So I feel as though that if you sit around that 1.25 million to 1.275, it's going to satisfy all parties. Let's just see what happens tomorrow morning, and I'm sure that there'd be extensive talks underway now between all parties.
Sambit, what comes out of today, how will that meaningfully change the course of oil prices? Even if they discuss an output cut, how much leeway would that give to oil prices rising from here in terms of absolute numbers being changed?
Sure. See, we at Platts are expecting that OPEC and non-OPEC, they will continue to have those discussions and aim for a cut of around 1.2 to 1.4 million barrels per day, because that's what we think is needed. Anything less than 1 million barrels a day could trigger a sell-off. So the market, they know that for any meaningful impact to happen on prices, the cut has to be at least 1 million barrels a day. In fact, yesterday, the six-country monitoring committee also recommended that 1 million barrels a day cut. So we are still expecting that to happen. And at Platts, we believe that if that happens, then we could see oil hovering around 60 to 70 in the earlier part of 2019.
Million barrels per day can move oil prices by $10?
Sorry?
Are you saying a cut of at least 1 million barrels per day in output can move oil prices towards 70? So I'm assuming you're saying that could be a gain of about $7 to $8 because of that sort of supply step back?
You see, what has happened is the market has already factored in another factor over the last 2-3 days. As you could know, the China-US trade war, the things which have eased off after the US sanctions statement from Trump, and that helped the prices to bounce back a little bit already. So the market is expecting that the impact from economic growth from that is going to be lesser. So as a result, we are expecting that that will also act as a cushion. That and if this output cut really happens up to between 1.2 to 1.4 million barrels. As a combined factor, that should help the market
sure.
To a large.
I'm sorry to interrupt you. I get that, but as a mark of reference, so to speak, and you said you need to have about 1 million barrels per day to move the oil market or oil prices. Typically, how much does that influence the range of a move in oil prices? A million barrels per day, going up or down? Is there a measure? Is there a benchmark of that sort?
No, I don't think there's a measure as a benchmark for that. But what I'm saying is that the market is very much has factored in the fact that in the early part of 2019, the surplus would be anything around 1.2 to 1.4 million barrels a day. And that's the estimate we also get at Platts. So for that to happen, so the meaningful impact on price to happen, the cut has to be at that level. Otherwise, the impact will be very less.
Peter, Russia has been struggling with its own fiscal problems. Iran does not want to participate in a cut. Libya and Nigeria are exempt. Iraq has just started to increase supply. Saudi has clearly said that they won't cut alone. So how do you see OPEC and non-OPEC members' support for output cut build-up?
Well, that's going to be the great issue. I mean, when you're looking at the likes of even, Nigeria and Venezuela added to that particular party, we understand certainly from, the Iran situation, and take on board also Qatar. From 1st of January, they'll no longer be involved. So really, it seems to be a difficult to gain consensus across all members. And that's going to be I think there's got to be a lot of jockeying over the next 12 hours or so to get some form of compromise worked through the mechanics of OPEC that all parties are interested and satisfied. And it normally takes a fair bit of time. I've been to OPEC quite a few times now in Vienna for these major meetings, and there is also always, a degree of uncertainty leading up until really the very last, 20 to 30 minutes, and then the press conference is presented to the analysts. So all I'll say is this. You've got volatility and you've got uncertainty, and it's going to not stop over the next, 12 to 15, 18 hours to get some sort of satisfaction for all parties.
Right. Peter, the other big issue has been of Qatar's withdrawal from OPEC, and a recent move at that. A very symbolic move, one would say. Does this also indicate the disgruntlement of smaller players by Saudi Russia dominance, or is it Qatar just acting out due to the blockade?
Well, I think there's also a strategic push from Qatar, whilst that may be, an underlying not issue, but underlying respect to the blockade. They've also got to take on board. You're only producing 600,000 barrels a day. I'm sure they'll be able to move on that, as far as moving that production to an adequate buyer. But the other side, I think, needs to be considered is the LNG push. Their strategy has been always to be a major player in the global market in LNG. And they're very much focused. That's, a key point as far as revenue. And that's, I think, where they need to, look forward from their revenue side over the coming years. And that's been demonstrated by them saying, well, they no longer want to be involved with OPEC. And it could be there may be other markets and other parties, smaller producers that may follow suit. Again, that's going to be a work in progress.
Okay, fair enough. And, just to close out then, Sambit, give us your thoughts, because there's the issue of the Iran sanctions also. Data, I know the sanctions came with the waivers, so many believe that it would be a diluted version when the data actually comes out on the kind of output sourcing that's happened from Iran. How will that change the scenario, if at all it would influence?
See, Iran is obviously one of the key things, and the statement has come out that they'll be seeking an exemption from these cuts because their production has been declining. I mean, for the first time, the production has fallen below 3 million barrels per day. We had in November, which basically that might bolster their case to argue that they want an exemption from these cuts. So as far as the production part is concerned, that's definitely the minister has come out to say whether that they don't want to join. So that has complicated the situation a little bit. The other big key question is that whether they can convince Libya and Nigeria to join the cuts. They were exempt. They didn't join the cuts the last time. So whether they can join the cuts this time. But one thing is extremely clear that Saudi Arabia will have to be the biggest, has to shoulder the vast majority of the cuts, and for that to happen. So as far as the situation stands, the latest statement from Iran has really made it a bit complicated. So, and raised questions whether they can really agree to a specific number. So that's a firm commitment, a number that will, the market will take it seriously. Without a firm number, it will be difficult for the market to, believe that what exactly is coming.
Right. Lastly, Peter, let's talk about scenarios. In the likelihood of a no deal, how do you see crude prices move? And with the recent rebound in Brent from 59 all the way to 63, do you think the market is already priced in an output cut?
I don't necessarily think so. I think the bounce in crude was very much, it could end up being a dead cat bounce. Quite simply, you've seen a market that was massively sold off. And if we look at the US equities market, Wednesday, Thursday, Friday shot the lights out. It was just absolutely, strong buying. And then Monday was very similar after that, the talk of the G20 in Buenos Aires at President Trump and Chinese, Xi. So in turn, that created a sense of well-being. The market was bid up. And then yesterday, on Tuesday in New York, the Dow was smashed to the downside, down 800. I feel as though that it'll be interesting to see what happens in New York and the end of Europe trading today. There'll be further softening, I think, across that energy sector. And I feel as though that you may see a weakening of Brent and WTI over it'll probably bounce after the announcement tomorrow, but I think you'll see structural weakness in the energy markets over the coming week or two. So that's the issue, and I think that's a great concern to all producers as far as revenue.
Okay, thanks very much, Sambit, as well as Peter, for joining us and making sense of the oil market for the benefit of our viewers.